Today we have a very special guest with us, Mr. Thibodeaux, another Louisianian. Of course, that's where I'm from, so I'm very excited. We'll be talking about short-term rentals today. But before we have our special guest, I would just like to share some things about Quest in case we have anybody new or joining us for the first time. We're so happy to have you. All right, so who is Quest? Quest is a self-directed custodian, of course, out of the great state of Texas. We are out of Houston, and we facilitate the transactions that our clients ask us to. We have about 22,000 clients all across the country. So no matter where you're joining us from right now, we are absolutely able to help you. Doesn't matter what state you're in. We have about $2 billion assets under administration. Notice I did not say management. We do not manage the accounts. We are the custodian. But of course, we help with the administration of the accounts, the record keeping and whatnot. We have about 110 employees, most of them being here in our Houston office. And we do have an Austin office and a Dallas office as well. We do have about 36 CISPs or certified IRA service professionals. I got mine in June. It was very exciting. This is a very specialized designation. We had to learn a whole lot of IRS codes, but it was worth it. So we are really specialized in learning just things about IRAs. We only have self-directed IRAs, so this is kind of our specialty. And then the next number, I think, is a really important number, $450 million in undirected cash. This is cash that's sitting in our clients' accounts that's doing nothing. So this is opportunity money. So this is money that they can lend out in the form of a promissory note. This is money that, if you're raising money, this is something that they can invest in syndications and what have you. So that's opportunity money. I don't have enough to fund my deal. There's a lot of cash, and we have a lot of networking opportunities to connect y'all and get to use that. So remember that name for that amount for later. Of course, our disclaimer, Quest does not provide any legal, investment, accounting, tax, investment advice at all. This webinar, like all of our webinars, is for education purposes only. Please make sure you are contacting your financial advisors, your investment advisors, your attorneys, your CPAs, tax preparers. Before you get into any investment, make sure you are doing all of your due diligence, not only maybe in a company that you're investing with, but maybe on the people that are in that company as well. Very, very, very important, so you can have a better investment experience. So what is a self-directed IRA and why do you need one anyway? I am so happy that you asked. So self-directed is really a completely made up marketing term. There's no legal difference in a self-directed IRA and a quote regular IRA. Self-directed really just means you are completely in charge of the account. You are directing us yourself. You are telling us what assets you want. You are telling us where to send the money. You are telling us everything. Here at Quest, we have an open architecture platform to invest in private assets only. We don't hold anything publicly traded. So no public stocks, bonds, mutual funds, what have you. So we do, so the huge family of private assets you can choose from certainly would be diversified in an asset class alone, private assets, being so diversified in what you can invest in. Or if you're kind of looking at your total retirement picture, it can be a great piece of the puzzle, if you will. Maybe you have public assets here, private assets here, kind of whatever you're filling in over there. So I don't think there's anything wrong with investing publicly. This is just a different way to invest privately. Some tax savings. All of our accounts, all the 7 accounts here at Quest do have some tax savings. Some are tax deferred, like the traditional IRA, where that's pre-tax money. You haven't paid taxes on it. So gross tax deferred. So at retirement age of 59 and a half, that's when you start paying taxes. Or we have a Roth IRA that we are opening for free this month, which grows tax-free. So after you have that account for 5 years and reach 59.5, everything comes out for free. And I wish I had more time to talk about the Roth IRA, but we don't. But we're opening it for free. So call us, ask us about it. We're happy to tell you about it. Social investing, you can invest in your community. You're able to seller finance for somebody if they can't get like a traditional mortgage. So I really like that advantage as well. And of course, invest in what you know best. If you're a realtor, or a lender or something like that, somebody in title and you really know about real estate, use your education to help you pick out investments in your IRA. If you know a lot about oil and gas, if you know about lending or notes or what have you. We have people with cattle in their IRA. That's what they know about. So it really does allow you to use the existing education that you have to kind of help you with these investment choices. Oh, there we go. So these are the 7 accounts that we have here at Quest. We have the 2 personal plans, the traditional and the Roth IRA. We have 3 employer plans, and we have specialty plans, the health savings account and the covered out education savings account. These are 2 other accounts that you can get tax-free distributions now for qualified expenses. Why don't you call your IRA specialist now? We are happy to help you with all of that. So this is really a list of the 3 asset classes that people really invest in: real estate, private entities, and promissory notes. But this certainly wouldn't be an extensive list or a complete list of everything that you can invest in. So a lot of choices here. And there's plenty of stuff that isn't listed. So how does this work? So first you open up an IRA here, very easy process. We can send you an Adobe Sign link, 10-15 minutes to fill it out tops. It actually sends itself back to us. Funding your account, we can help you with that, initiate the transfer for you, locate your investment. If you have no idea where to look, we're happy to help you find resources. We do require some supporting documents. So we have a 24 to 48 hours, make sure those are in good order. And then within 24 to 40 hours, we can send out the funds to your investment. So our normal processing time, 24 to 48 hours. So not too bad. We make this as easy as possible for you. Of course, we love our free education, and we're so proud that that's something that we provide. So classes Tuesday and Saturdays at noon, different speaker, different topic. The virtual networking happy hour, not all of us are in the great state of Texas and come to our in-person events. So I'm actually hosting this class tomorrow. Normally this would fall, I believe, on the 21st or something. So we moved it up early. So I know people with their families, so we moved it up to tomorrow. So if you want to register for that, Miss Brianna, our amazing moderator for the day, can put that link in the chat box for you. And if you miss any of these webinars, you can always watch them on YouTube. They're saved forever and ever and ever. These are the in-person events. If you're in the Houston area, it's the first Tuesday of the month. Austin takes the second Tuesday, and our Dallas office takes the third Tuesday of the month. So we'd love to join. We'd love to have you join us for our in-person socials, for networking, for more education, and we have food and drinks. So come join us. It'll be really fun. And this is our special offer just for you. We are opening Roth IRAs for free for the rest of the month. If you don't know what a Roth IRA is, why you need one, have any questions about it, please call us. We are absolutely happy to help you. And Ms. Brianna is going to put our IRA specialist email in there as well. Our phone number, another one besides that one, is 855 fun IRAs. That's what it is. 888 fun IRAs, because we really do think this stuff is fun. We really do talk to each other in the halls about tax code and this and that, because we really think this stuff is exciting. Oh, there we go. 855 fun IRAs. I was right. talk to us live on the internet. If you go to our website, a box pops up. Do you want to chat? It really is us, the IRA specialist. It's not a robot. I get that question all the time. It really is us. Okay, enough for me. I know that you did not come to listen to me talk about Quest. You really came to talk to our man of the hour, Mr. Eric Thibodeaux, about short-term rentals. So, Mr. Thibodeaux, thank you so much for being with us today.
Sure. Glad to be here. Thank you, Nicole.
Wonderful. All right, sir, take it away.
Great. So welcome, everybody. Today, we're going to talk about short-term rentals, and why investors should consider investing in vacation short-term rentals. My name is Eric Thibodeaux. I've been a vacation rental owner. I still am a vacation rental owner, property manager, fund manager, and investor. So as we go through some of my experience, so you have a little bit of idea of who I am. Certainly, I'm a Quest IRA holder. Both my wife and I are, and we invest in many of the asset classes that you saw there. So it works out very well for us. Uh, Basically, I've been doing vacation rentals since almost 20 years. It'll be 20 years next year, and it's really been successful. I've also done long-term rentals. I've done multifamily. I've done syndications. I have done single-family homes, and it's really been real estate. I found has been a great asset class uh, for us. I've had 3 syndications. One was an apartment complex. We made 216% gain in 2 years. We just finished exiting a group of homes there in Houston. We turned just $1 million profit in, I don't know, 4.5 years. And vacation rentals has been my focus here in the last few years. Uh, Basically, we sold a couple of them. One was a $260,000 gain that we 1031'd, and that one was really interesting. One we could talk about that as a case study sometime. And then a $550,000 gain. And basically, I've been a managing principal in 3 syndications. The markets that I operate in are in Gulf Shores and Orange Beach, Alabama. We have $4.6 million of real estate there that's returning 10 to 15% cash on cash return for our investors. We also own 2 properties there ourselves. I'm also CEO of Current Tides Vacation Rentals, where we're managing 60 properties and growing each year in that particular market. So I manage a lot of businesses. So I'm also CEO of Here Stays, a Texas-based listing site where basically travelers come in and don't pay fees. We have around 400 properties listed, and that's really just getting started there. And then I'm the managing partner of Bigger Texas Vacation Rentals, which is a vacation rental fund purchasing and developing vacation short-term rentals in the Texas Hill Country. As I mentioned, I've also done a lot of apartment deals. I've been through probably 40 multifamily deals. I own office buildings, medical centers, vacation short-term rentals. Today, I pretty much prefer to be a passive investor, and I'm really slowing down some of the multifamily activities. I'm probably investing about 2 a year right now through syndications, really focusing actively on short-term vacation rentals, and that's what we're here to talk about. So here's the big question. People say, why should I invest in short-term or vacation rentals? And here's a quote from Corey Walters. He's with Here. Here is a company that does investing in vacation rentals. And basically, vacation rentals are the highest yielding real estate asset class. And people are scared to park their money in the market right now. And so that's really what I found. That's why I made a switch a few years ago. And I still love multifamily and still invest in it and still hold a lot of assets. But I really believe today vacation short-term rentals are a great asset class. And many people don't consider them to be an asset class. A lot of times people talk about investment returns at the end of the presentation, and this is one of the things I learned uh, quite a long time ago. Uh, I'm going to talk about the investment returns that you could see at vacation short-term rentals at the beginning of the presentation, not the end. So investment returns can vary based upon the term, interest rate, down payment, purchase price, and expenses, just like you would find in a long-term or multifamily property. The cash flows are based upon my experience in both long-term rentals and short-term rentals. So in long-term rentals today, I'm seeing typically 4 to 7% cash on cash returns for multifamily, and houses maybe a little bit higher. I'm also seeing some of the syndicators, managing partners holding back on cash as we enter into this into 2023 recession, maybe some inflation, right? Higher interest rates. So I see a little bit of holding back there, and it's right. I mean, uncertainty, you build cash, but 4 to 7% is what I've been seeing, uh, and what I've invested in this year. Some investments are delivering more, just kind of based on the dependent of the structure of the deal. Short-term rentals, basically 8 to 16% cash on cash, even in today's market. I think I purchased 4 properties here in the last year, and I've also done two. I've also invested in 2 short-term rental syndications. So basically, the returns kind of depend on the structure of the deal, as always. Houses can be upward of 30%. You get some pretty nice beach houses, um, mountain homes. They're high dollar homes, but they can definitely turn a pretty good amount of money. Now these are coming down some. The percentage of the returns are coming down as the markets are adjusting with the points that we've talked about in the first bullet here. And that's all about the terms of the deal and what your purchase price and everything are. But really, when you look, you're easily double. You could be triple, but let's say conservatively double your returns in this market with short-term rentals over long-term rentals. So why? What are vacation short-term rentals? And we talk about this, or you hear about it a lot. And there is a little bit of a difference, and that's why I try to focus on the different ones. So uh, basically, vacation rentals are typically in destination locations. Like I'm going to uh, Orlando, I'm going to the beach, I'm going to this mountain to go skiing, whatever. Uh, and they can have varied levels of occupancy throughout the year. That's one of the things, in multifamily, we talk about occupancy throughout the year. I don't necessarily focus on occupancy in the short term vacation rental space. I just look at what is my revenue throughout the year. Certainly, I like to be occupied, and um, I'll take a guest maybe at a lesser rate than I would if I need to or want to, because that dollar amount's better than zero. But these vacation rentals are beaches and mountains and ski and seasonal locations, particularly in the summer months. Typically, they're rented anywhere from 2 to 7 days uh, per in a time. Short-term rentals, basically, they can be in any location. They tend to be more in urban locations. Like you may find short-term rentals in Austin, or you may find them in Nashville, in the city themselves. Not as you go out, and you may find them. You can find them everywhere. But let's say they may or may not be a destination location. There are varied levels of occupancy. Could be more business travel. We see a lot of business travel in short-term rentals. Sporting events like the Super Bowl, concerts, conferences. Typically, these are renting for 2 to 5 days, and maybe to larger groups. You may have larger groups traveling together to a wedding, to for business, all these different activities. So there is a little bit of difference between the two but in the end, they operate the same. So hopefully this shows up well here. Um, I've done a comparison a little bit to talk about what is the difference between long-term and short-term rentals, and we'll just go from top to bottom. So leases in your long-term rental, typically they're 6 to 12 months. Um, in a short-term rental, they're typically less than 30 days, most of them. Now, during the winter months, you could have guests staying for maybe 2 or 3 months, as we call them snowbirds, as they come down to the south, right? But the leases are shorter, hence the term short-term rental. Tenants are much easier, and that sounds interesting because I've done long-term rentals, but tenants are easier. Guests are more work, right? I may have 2 or 3 turns in a week for guests coming in and out of vacation short-term rentals. And, I also still own some long-term rentals. And I mean, I don't even talk to some of the people sometimes. They just, as long as they're sending in the money. But short-term rentals is more work, more activity, more turnover, right? Long-term rentals, your occupancy is consistent. Um, and I know people check in, check out. I'm sorry, uh, terminate their lease, move out. So there is some variability there, but in short-term rentals, occupancy does fluctuate seasonally. Like right now, the beach markets are November and December have a little bit of ups around Thanksgiving and Christmas, but it's definitely much slower in this season. I'm not generating the same revenue in um, December as I did in June, whereas long-term rentals, it's fairly consistent. Housekeeping is not needed in long-term rentals. In short-term rentals, housekeeping is critical. It really is critical. I mean, people are going on vacation, they're going to a destination. To arrive to a house that's not clean is not what they're going to put up with. They're going to call you. And some of the rules around some of the online travel agencies has really made this a lot tougher. So housekeeping is absolutely critical. If you're a short-term rental manager, you're going to lose properties if you're not maintaining your housekeeping team and clean very well. Monthly payments are set. Long-term rentals, so if you're renting an apartment, it's $1,500 a month, maybe for the next, 6 to 12 months. And here's where short-term rentals, this is where you can really this is where the money comes from, right? Market is critical, and basically, I can adjust rates. I mean, daily. Matter of fact, we utilize software. A lot of professional managers in the industry use software that monitors the market and adjusts price daily based upon occupancy and what the other um, what the other comparable properties are doing in that market. So someone checks out today, I can raise the price $100 a night the next day. I can charge, $200 a night for the first 3 nights and 500 for the last 2 nights. It's quite variable and allows me to um, make more money. This is where one of the ways that you can make more money. Short-term rentals also, as I mentioned, the market's absolutely critical, and regulations. We're going to talk about that a little bit more, but regulation is increasing in short-term rentals. Basically, in long-term rentals, you have one tenant. It's pretty easy operations. Um, Short-term rentals, you have multiple guests per month and more complex operations. You have people coming and going. You have housekeeping. You have maintenance that you're performing, and so it's a little bit more work. When we talk about the loans, so long-term rental loans are easier to get, and we'll talk a little bit more about that. But basically, um, they're more established, they're more known, and the ability to look at what income revenue you're going to generate, and what type of rate you're going to charge, or more stable and set up in the long-term world. Short-term loans are a little more challenging. and they're highly dependent upon the lenders. Some lenders won't lend to short-term rental property owners, and the rates typically are a little bit higher. We'll cover a little bit more about that later. Rental comps are much easier to get in long-term rentals. I can go out and look at comparable rates um, for my houses, for my apartments. Not necessarily so in the short-term rental world. Rental comps, you need technology and you need experience to go out and find it. And really, technology has just arrived in the last couple of years. And this also makes getting the loan a little tougher because, you know, rates, rental comps, and revenue comps in short-term rentals fluctuate quite a bit. So expenses in the long-term world are fairly, they're identified and they're fairly consistent from property to property. Expenses are more challenging and you need more experience in your particular market to look at what what are the expenses there. We'll cover some of that, and we've already covered some of the cash flow that you can expect. So, in the short-term rental world, I know we talk about long-term. The market is really important, but I really believe it's absolutely critical in the short-term industry. Um, you need to identify a target market and then target properties that you would like to purchase. You do that in both markets, right? But then you also need to know the market very well, particularly around your locations, your pricing, and regulation. I can't emphasize enough, if you've not invested or looked at short-term rentals, I'm not saying that to make you nervous, but once again, we're preparing ourselves, we're educating ourselves, and know that, hey, regulations are a big deal, and I want to look at those as a key factor when I go into a particular market. The markets that I currently operate in are Gulf Shores, Orange Beach, Alabama, Perdido Key, Florida, and Fredericksburg, Texas. All are very good markets. They have different attractions, right? One market's a beach market, one's the hill country of Texas, different appeals and different ways of marketing and attracting visitors and guests. Both have fairly good regulation. Um, and so that's why I like to continue to operate in those markets. So next I need to understand what's attracting visitors to my target market. Is it the beach? And that's certainly obviously at the beach. But then what attracts people to Fredericksburg, Texas, and why am I there? And so that's really part of it. What is your availability of properties in your target market? You may be able to find a great market, right? However, can you actually purchase properties in that market that would meet what your potential guests or visitors want to see? The supply is definitely increasing. I think that's why we're seeing some I won't say issues, but the supply for short-term rentals in a market are increasing year over year. Your team, just like in long-term rentals, is absolutely critical. Maybe more so in short-term rentals, as there is frequent day-to-day activity in your properties. Regulatory environment. Um, I mentioned this a few times, and I don't want to uh, think that this is a showstopper, but it's something that you need to look at. They're really seeing increasing regulatory restrictions and some bans on increasing the number of properties in some markets. Okay. I just was involved in some activities in Dallas, see where there's Dallas, Texas, there's some, uh, looking at restrictions. And I wouldn't say that you could say, well, hey, like the ski markets don't want to, I'm not going to have any problems there. Steamboat Springs, Colorado is going through some issues right now. Uh, and so you really have to take a look at the market and understand what regulations are involved in all aspects of real estate and short-term rentals. Some locations or towns are saying, hey, I don't want short-term rental vacation or short-term vacation rentals in my market anymore, or I want to cap the number. So you need to get a feel for what's happening, what's the direction of the market regarding regulations. Some are completely fine, no issues to be concerned with. Others, you may want to say, hey, I need to learn more about what's happening. When I went to Fredericksburg, Texas, I looked at the market and I found that the city, inside the city limits, was having um, some issues on restrictions. So I just moved outside the city limits, moved to areas outside the city. Some condo buildings, if you're in a market that uses a lot of condos, Gulf Shores and Orange Beach have a lot of condo buildings in Florida. Your realtor can help you steer you from those buildings that don't allow um, vacation rentals. Some HOAs in these buildings have said, I'm capping it to 10%, or I'm capping. We're not open for renting short term. It's really just for residents only. So once again, understanding and anticipating regulations are part of working in the real estate and really any business. Last point on this is understand lodging taxes in your market. Our market in Gulf Shores and Orange Beach, they just increased 3%, going into effect, some now and some next year. And I've seen in other parts of the country where they're raising them at 6 and 9%, making it like 20% of the rental rate is now taxed at 20%. So regulatory environment is really important. So when we look at expenses in short-term rentals, uh, they're not. I won't say they're as straightforward because you still have mortgages, you still have interest rate, you still have taxes, you still have insurance and maintenance. But then there's other things that you need to consider. Maybe that you're not. If you're in a long-term renter market, a multifamily or a home, you may not have some of these expenses, and we'll go through them here quickly. So furniture, you need to maintain high quality furniture and replace it when it gets bad, right? People want to vacation in a place that's the same or better than where they currently live today. So if you are not maintaining mattresses, if you're not cleaning the property, if you're not providing good beach access, you're not maintaining furniture, you can expect that your rental rates will go down. And really what drives some of this is on the online travel agencies, and typically those short-term providers. Guest feedback is really important, and that guest feedback is typically made public, and they will talk about any and all of these issues with your furniture if it's not well kept up and maintained. Lodging taxes we talked about, something that you will pay in the short-term rental. Monthly HOA dues. Check with your realtor on that. Certainly, you pay HOA dues in a maybe in a single family, but here, I'm just thinking we're paying probably anywhere from 550 to 850 a month in HOA dues, and there's some properties that are even higher. Parking fees, resort fees, pool fees, golf course fees. These are all things that properties may charge you or your guest, and you have to pass those on to the guest. Cleaning and housekeeping after each guest departure. This is really important, and you need to pay well to keep your quality housekeepers. And this, as I mentioned before, this will make or break your short term rental business. Deep cleans. So it's almost like you're doing a turn, for a long term renter or multifamily unit. You're doing, when they leave, you do a deep clean. You're definitely doing a deep clean each year as you go into the slower seasons. You're going to pay utility costs. Um, you may pay that on vacant units in multifamily or short and long term rentals, but you're paying as the owner. You're paying all expenses. The guest typically is not paying any of those costs. Today, remote entry locks for guest entry are it's almost something that you need to do. Um, we bought some properties from another company in our market, and I don't know, maybe 15 of them had keys, and we worked with the owners to go to remote locks, and it really makes a big difference for the guests. Now, remote locks can be anywhere from, 50 to 200 to $800. Uh, that where you can put the code in, and you can monitor who goes in and out. But it's an expense you won't maybe have um, in a multifamily property. Inspection of properties after cleaning, before arrival, and after guests depart. So turning the property, particularly in the summer, uh, you want to inspect the property for damages so you can call maintenance in. Then you're going to clean the property, and then someone's going to inspect it before the housekeeper leaves, and probably before the guests arrive if there's a next day departure. So inspection is really, you're paying people to do that. That's another cost. Business licenses, which include safety checks, and a lot of these are based on revenue. So you pay a fee per each year, um, but then as your revenue increases, your license and business fee increases. Safety equipment, fire extinguishers, pool safety equipment, grills, carbon monoxide alarms. These are all things that you need to make sure that, based upon what your property, where it's located, what the local rules and regulations are, you want to provide safety equipment. If you have pools or hot tubs, you have to provide this information, this equipment. I talked about comps earlier for rental revenue, and obtaining comparable rental revenue for vacation short-term rentals is not as easy as long-term rentals. Um, like I said, there are some software companies that are starting to catch up. I can go out and look at comparable properties and look at data through some providers in the long-term rental world. But in short-term rentals, it fluctuates and it goes back. Um, right now, we're going back to 2019 rates. 2020 was COVID, and so there's some things that are skewed there. 2021 was probably the best market I've ever seen, and probably maybe the best market we'll ever see. Hopefully not, but it could be. And so to use those particular rental comps when I'm purchasing a property is I'm skewing the data. And what's going to happen is you're going to provide comps that are really, really high, and the lender's going to like it. You're going to like it, but then you're going to see that you're not able to produce that rental revenue. And then you're going to have some issues with your lender, or you're going to have to start paying out of your own pocket or doing cash calls, things like that. So, just like in the multifamily world, making sure your data is good is critical. It's a little more of a challenge here in the short term world. The software is growing and catching up in this space, but typically you're paying subscription pricing for this information. So loans and valuation in short-term rentals. So loans vary based upon how you're purchasing the property. There's the loan structure, and and then you're working with your mortgage broker. As an individual, you can expect to pay. You can expect 30-year loans with 20 to 30% down. When you are working through a limited liability company or you're in a syndication, uh, typically, these amortizations have been 25 years. I've done 20 years. I've seen them, and typically they're 5-year terms. So you're set in, let's say, a 5-year fixed term on a 25-year amortization, and that it'll readjust in after the 5th year. So what you're seeing is you're probably bringing more cash to bear. Your amortization is lower, so it's going to impact your cash flow for that particular property, right? So it's something to look at. Certainly, you can bring other people's money together. It does help out in that regard. However, I have not seen a 30-year loan through a LLC. Not saying they don't exist, because the loan market changes quite a bit. Valuations for short-term rentals continues to be based upon the comparable value of similar properties sold. So what that means basically is, just like you're buying a house, a short-term rental is a house, it could be a condo, and I look at the comparables, or someone looks at the comparables, and then they compare it to what my property is listed for. It's not like multifamily, where they certainly look at that, but then I can have the ability to do forced appreciation on the property. I increase the net operating income and improvements, and therefore my valuation goes up in the multifamily. That's not true in today in short-term rentals. You can drive the NOI up. Some lenders look at it, but mostly what they're looking is a comparable rate. So that's the big differences here when you're looking at these properties. Investment vehicles, certainly you can purchase a property and you'll need to determine whether you're going to purchase it in your name or an LLC. You want to work with an attorney to determine what's best for your personal situation. I purchased in both my name and through limited liability companies, and certainly person purchasing as an individual allows you to title the property in your name. You can't have any investors, and typically you get better financing options. However, your liability is not limited and could impact your personal assets. And tax preparation is basically on your personal tax return. When I'm investing through a limited liability company, which you'll typically find that maybe you're going to do that, or you're working in a syndication, it allows you to title the property in the LLC's name. You can have investors, right? You're going to work through all the SEC rules that we're not going to cover here today, but that's one of the options you get to talk to a SEC attorney about. Your financing options are not as attractive, but can still be good, right? Um, I look at 20-year loans sometimes and say, my cash flow is not the best, or it's not as good as it would be if I had a 25-year loan. However, I'm paying more, my principal is being paid down a lot faster on a 20-year loan. My liability is limited to the asset only and should not impact your personal assets. And of course, that depends on your lender requirements and whether you've signed on the loan or not. Tax preparation is typically your Form 1065, which is for the LLC. And okay, so here's a case study. This was a property that was purchased in August of this year. It was a pioneer home, basically an old German home that was redone. Purchased in August. It sat on 11 and a half acres, and really nice property. I was able to go visit it. It's restored main home. It's got great charm and character. It's got 5 bedrooms, 4 baths. It can sleep 10 people. Uh, this is in the hill country outside of cities, so there's no deed restrictions. So I can make changes, on this property. I'm not limited to issues like I would be in a city. So that's part of understanding the regulation. There's no HOAs here at all, and there's no land use restrictions. So this is a yield play, immediate cash flow delivery, 12% cash on cash, and basically there's opportunities for value add with a swimming pool and a hot tub on the backside of this property. Now, this property offers, it's one of the things in short-term rentals that you have the opportunity to do is you can buy large like this and you can develop and grow a small community. And so when we look at this property, they're looking at phase 1 value add. They're going to add, the building that you see next to the windmill. That's actually a garage. And that previous owner was converting it to basically a 2-bedroom or 1-bedroom property. But you can convert that to 1-bedroom, 1-bath cottage. You'll sleep 2. And then you could also, with the rest of the probably roughly 8 acres that's there, you could build additional properties. Here they're talking about adding 3 2-bedroom, 2-bath cottages here, each sleeping 4, excuse me, which would be a total of 12. And so let's look at this here because this is where regulations come back in. So I have 12 people here, 10 in the main house, that's 22, and then 2 in the garage or in the garage conversion. So that's 24 people. And that's really important on this property because once I get to 25 people on one water system, I become a public water um, supplier. And so I need to meet different rules. By keeping it at 24, I avoid these rules. And then basically, the investors here will pay less money and deal with less regulation. So this is in the hill country. A lot of properties, particularly in this area, don't have a lot of amenities. So adding a swimming pool, hot tub, fire pit will greatly enhance this property. Looking at, they're figuring 18% or greater cash on cash annualized. And with the construction, when I looked at their numbers, and everything's based upon timing in the market, right? If they're building for 200 to 250 per square foot, and then they're going to get that appraisal, right? They're getting appraised at 450 per square foot. So the investors have the opportunity for a cash out refinance on this property. There's a different additional acreage. You can add more um, cottages on the property. You can add more water systems, and basically, um, you have the opportunity to grow over time as you need. I think there's a picture of what they're looking at doing here. It's the cottages and the locations and the expansion plans. So short-term vacation rentals offer you flexibility. There are different costs, different expenses, different things to consider, but certainly worth the additional rental or different revenue and income for you and your investors. All right. So with that, I'll be open to any questions that I can help you with.
Wonderful. Thank you so much for that information. That was great. We have our first question. I'm sorry.
I was losing my voice. Sorry.
Oh, so sorry. Of course, get a drink of water. So our first question comes for Mr. or Stephen Lewis. Outside of Airbnb and VRBO, excuse me, have you seen other target markets that produce decent returns for short-term rentals?
Yeah. So here, typically when we start out, you're going to leverage Airbnb and VRBO, but there's a lot of other sources out there that you could do, and these are what's called OTAs, online travel agencies. Um, what we do is we market through our website, and we also market directly. And then why I say we start with Airbnb and VRBO, um, I want to invite their guest over. Actually, they're your guests. They're just a platform that's introducing you to them. Don't let them think that they're Airbnb guests. They're your guests that are coming to stay at one of your properties. Um, we get their, we get their email address, and then we remarket back to them, typically to say, come back and stay with us again, but book. It's called book direct, right? Um, VRBO and Airbnb both charge traveler fees. Depending on where you're at, it could be anywhere from $300 to $500, um, for that stay. So, um, yeah, basically, there are more platforms, but don't be afraid of these particular platforms. Um, and you can always remarket back to your past guests. That's something we do quite often, and we also purposely, I should say purposely. So the best price for any guest is on your direct booking site. So if that's always something that you can say, you can mark up the prices on Airbnb and VRBO. Your best price is on your site.
Awesome. Thanks so
But
much. Mr. Lewis had another question, and I'm not sure if this was for you or for me, since I put in the comment box that IRAs, the only type of loan an IRA can have is a non-recourse loan. So I'm sure this strategy may work outside of an IRA to get a loan. Do you have any comments on this?
Yeah, so he's saying this is an option to get a business loan based upon cash flow to compare to comparative market analysis. Yes, there are. I've talked to a couple of companies. One of them is called Nectar. And what they do is they look at the future cash flow of your business or of your property. Let's say in this case, and Nectar is pretty much working strictly in the short-term vacation rental industry, and they will, provide you with a loan uh, based upon your future cash flows. So that's something that you could do. I found their interest rates were a little higher than going out there, but if you can't do a traditional loan, um, I think there are some options out there.
Wonderful. Thank you. Of course, one of the reasons I love hosting these is, of course, I get to learn something new and I get to ask some questions. You did say that you invested through entities like an LLC on the VRBO or Airbnb. Was that correct?
Yes, yes. So
So
yeah, ask that question again.
you invested through an entity like on a VRBO or Airbnb, like through an LLC or something like that?
Correct. Yes, yes. So what I did is I set up a structure, typically, and I've also invested in funds that basically go out and buy properties. Excuse me.
The question I have about that is, did you have any issue working with either team as being an entity, as being, quote, the owner of the house is an entity? Did you have any trouble them releasing funds to you or anything like that because you are not an individual person? In the past, we've had some clients run into that, so I didn't know if you experienced that as well.
We haven't experienced that problem. I mean, so when you go to Verbo or Airbnb, you provide them a W-9, and so if you're an individual tax preparer or tax person, you're going to provide your social security number. If you have
So
an LLC, you're going to provide them the W-9, and then they're going to provide that to you. I'm sorry.
So we submit the W-9 for Quest. So it has Quest Trust Company and like our tax ID. I was just wondering if y'all had any issues with that. Mr.
No.
Lewis has another question. So we want to make sure we have in time. Deal structure question. What is the ideal deal structure you have seen to work for your 8 to 16% cash on cash return on investment?
So the ideal structure, I would say, Stephen, is probably more than ideal. It's better than ideal for those cash flows in those setups. One is we have limited liability companies. We went out and purchased those assets. Most of them were 25% down. I like to put 25% down on those investments. Sometimes they offer less, and I still say I want to do 25. It does impact your cash flow. However, um, I feel fairly safe and secure with 25% down if the market were to fluctuate. I'm able to control cost. And what helps us out a lot in that particular market is I own the property management company. So I don't charge, 15, 16, 18, 20% management fee. So I save that for my investors. So one of my attractions in that particular market is say, come work with me. We're not going to have any management fees associated with a third party managing it. We're managing it ourselves through our own company. So that helps with looking at the revenue and the expenses.
Wonderful. Thank you so much. Let's see. So Airbnbs and VRBO and all of that kind of stuff is becoming more and more popular inside of the IRA. What would you say is maybe like, or top three kind of most important things to look out for when you're getting into these? If like
Yeah.
this kind
So
of first time of kind of stepping your toe into the VRBO, the Airbnbs, what kind of top three tips or top tip would you say is for someone brand new getting into this?
yeah. So if I'm gonna purchase a vacation short term rental property, and I know I'm gonna market on Airbnb or Verbo or other platforms, one is I'm gonna understand my market fairly well, or I'm gonna let a third party manage it. Second is I'm going to understand the regulation in that market, to understand that can I legally market, I'm sorry, can I legally operate that property in that market? And then when I list on the OTAs, um, and really, I'd say this year and last year, particularly Airbnb has really come forth with new rules around parties, around, uh, if I show if I show a bedroom with two queen beds and I get there and there's a queen bed and a bunk bed, um, likelihood that if the guest complained, they're going to move the guest to a different property, and either you're going to pay for it or you're going to have to give them their money back. So they're really cracking down on some of these rules. Particularly here recently, they put out email about uh, your fees, or not just your fees, but it's like, I think when some people leave the property, there's a list of about 10 or 12 things, or maybe more, um, that you're supposed to do at the property. And some hosts on Airbnb are having them clean and do different things. So Airbnb said, you can't do some of these rules. So really understand what it means to host through Airbnb and VRBO. You own the property, and you're having the opportunity to market your property on that particular platform.
All right, thank you so much. We have one more question from Mr. Lewis, and this will be our last question, and then we will be over, unfortunately. So, data accuracy questions: is there any short-term rental software that you found to be most accurate compared to others?
So, as a professional property manager, I look at, I'll give you the basis for what should be looked at, right? So, when you're looking at short term software for revenue, there's two ways that you get revenue. One is called scrape data. That's where that company goes out and pulls all the data from perhaps VRBO or Airbnb, and then uses it back and provides that back to you, which is not bad at times, right? But there's also some where, like, I'm a property manager in a market where we share our data through a company called Key Data. Key Data allows us to go out and look at data. Some of it may be scraped, some of it may be um, shared data from the comparable properties in the market. A couple of that are out there that you could take a look at would be STR Insight, STR Insight, and then a company called Verolio, VROLIO. I've worked with both of them, uh, both good companies to help investors looking at revenue, and really more. They're really growing beyond just revenue. I mentioned expenses are really a challenge, and I think they're able to help now with expenses as well.
All right. Well, thank you so much. Unfortunately, that is our last question. I know that people have more questions. Mr. Thibodeaux, do you have contact information that you, sorry, Questro's trying to save electricity. Do you have contact information that you would like to share if some of our guests have more questions for you, want to work with you, etc.?
You just want me to post it here in the chat, or just give it to
That
me
works.
live?
Yeah, if you have access to the comments box, you can post it there. You can say it out loud. I'm happy to type it for you. Whatever works for you works for me.
Yeah, I don't. Yeah, so it's Eric Thibodeaux, and then my email would be Thibodeaux. It's ETHIBODEAUX, the number 2 at Comcast.net, and that's a good email for me. And my cell number is 832-289-1107, and I definitely would be uh, open to questions, particularly by email. I'm out of the country right now, so taking calls is a little more of a challenge, but emails are fantastic.
Thanks so much for sharing that. I know that you are in the country, and I'm really excited that I already knew how to spell Thibodeaux because I am from Louisiana as well. So that was really excited when I saw Thibodeaux. I was like, that is from my part of the world. So that was really exciting. We also just, I'm sorry.
It's a habit to spell it all the time, right?
It is. And when, of course,
Yeah.
my maiden name and everything, when I got to Texas or North Louisiana, nobody knew how to say it either. So it was a pleasure, though, to have you. Thank you so much for all the wonderful information and answering the questions. It was a joy to have you. We hope to have you back. Thank you so much for sharing your contact information as well. We put our contact information in the comments box as well. So, of course, if you would like to contact any of the IRA specialists, see how this works inside of an IRA, we would be happy to do that as well. Don't forget, we are opening Roth IRAs for free the rest of the month. So call us. We're happy to talk to you about what an IRA, Roth IRA is, how this works, how it doesn't work, what have you. Free account. So call us. Don't pass up this opportunity. Every time one of these ends, people call like the next day and they're like, yeah, I just need to do it today. But it's like, well, then it's a new quarter and it's a new year and it doesn't last anymore. So you gotta get it on, gotta get it in while it's on. And Miss Brianna just put the link for schedule an appointment with an IRA specialist. These are free. You pick the time. So the time is now to start opening that Roth IRA. If we get that tax-free retirement, if you are interested in a tax-free retirement and how to do that, call us up. We would be happy to tell you. All right. That's enough for me. I know I went past the 1 o'clock hour. Thank you so much to all of our audience members that joined us today. It was a pleasure to have you. And of course, thank you again to Mr. Eric Thibodeaux for being with us. It was a pleasure. So everybody, I hope you have a wonderful rest of the day. We will be back Saturday at noon with another exciting topic in self-directed IRAs, and we will see you then. So have a wonderful, wonderful afternoon, and we'll see you again in the quest box. Bye, guys.
Thanks. Bye-bye.
Thank you.